Hello, I'm James Anderson, a partner at Doyle Clayton. I'm here with my colleague Verity Saxon, who is an associate. This is the first of 3 podcasts we are releasing about the gender pay gap reporting requirements, which are expected to come into effect by April of this year. These podcasts are designed to help you decide whether the government's legislation on gender pay gap reporting apply to your business. If it does, we give step-by-step guidance through the regulation's requirements. For each step, we explain and give examples using Dayton's, our imaginary IT company. This podcast is also designed so that if you would like an explanation of a specific step in the process, you can move straight to it without having to listen to the whole podcast. You may find it helpful to download a transcript of this podcast, which can be found on our website. So, Verity, why did the government decide it had to legislate to require businesses to report their gender pay gap in the first place?
Thanks, James. Historically, female employees have been paid less than male employees. In 1997, women were paid 27.5% less than men. This had reduced to 22.6% in 2005, but the rate of improvement slowed and the gap was still 20.2% in 2011. To tackle this, the coalition government introduced Think, Act, Report, a scheme which businesses could sign up to voluntarily to report their gender pay gap.
Did Think, Act, Report work?
No, it didn't. The government hoped businesses would sign up to the scheme to establish themselves as a best employer in their sector. This would boost their reputation and enable them to recruit the best employees. While over 200 companies signed up to the scheme, only 4 reported their gender pay gap results. The failure of Think, Act, Report caused the government to bring in regulations to require larger companies to report their gender pay gap.
The regulations have now been finalised after a long consultation period and are expected to become law by April 2017. So, Verity, which businesses have to comply with the regulations?
The regulations apply to all businesses in the private or voluntary sectors in England, Wales and Scotland with more than 250 employees on the 5th of April in the year in question. Separate regulations will cover gender pay gap reporting in the public sector. These are not covered in this podcast. To know whether your business is caught by the regulations, you need to know how many employees you have. James will now explain which of your staff is considered an employee.
Under the regulations, when working out how many employees you have, you must count anyone who on the 5th of April is either employed under a contract of employment, or employed under a contract of apprenticeship, or contracted personally to do work. This would include casual workers who work either under an umbrella contract or a 0 hours contract, and also some contractors. Verity, is anyone not included?
The genuinely self-employed should not be included. Also, a company only need count its own employees. It doesn't need to count the employees of any group company.
So, if we take Dayton's, an imaginary IT company, as an example, it must first work out how many of its staff meet these requirements. This may not be as easy as it sounds, as Dayton's engages a large number of consultants, some of whom are contracted to personally work for Dayton's. Dayton's will have to consider each consultant and establish whether he or she should be considered an employee. Dayton's finds that it has 1,000 employees on the 5th of April 2017, and so will be expected to report its gender pay gap. Now that Dayton's knows it must comply with the gender pay gap reporting regulations, Verity, what does Dayton's have to do?
Dayton's must publish a report detailing 4 aspects of its pay. Firstly, its gender pay gap using both the mean and the median average hourly pay. Secondly, information on its gender bonus gap, i.e. the difference between the mean and the median bonus of its male and female employees over a 12-month period. Thirdly, the proportion of male and female employees who receive a bonus in the same 12-month period. Fourthly, the proportion of men and women in 4 pay bands called quartiles. Dayton's may also publish a narrative explaining the reason behind any gender pay gap or gender bonus gap.
When does the information have to be published?
If your business has 250 or more employees on the 5th of April 2017, you have until the 4th of April 2018 to publish the first gender pay gap information. The first requirement is to publish the gender pay gap using both the mean and the median average hourly pay. James, how do you do that?
Firstly, you need to calculate the gross hourly pay of your employees. Beware, there are some staff who are included in the total employee count, but who are not included in the gender pay gap calculations. They include partners, members of an LLP, and any employees who are receiving no pay or reduced pay as a result of being on leave. This could be sick leave, maternity leave, parental leave, or special leave. To work out the gross hourly pay of your employees, you need to know what counts as pay and what doesn't. Pay means basic pay, paid holiday, maternity and sick pay and pay for other leave, area allowances such as London waiting, shift premium pay, bonus pay, and other allowances such as car allowance, on-call and standby allowance. But it does not include pay for a different pay period, overtime pay, expenses, the value of salary sacrifice schemes, benefits in kind, redundancy pay and any payments for termination of employment, or payments in lieu of leave. You should look at the gross pay each employee receives in the relevant pay period. Verity, what is the relevant pay period?
The relevant pay period is the pay period which includes the 5th of April in the year you are reporting. If your employees are paid weekly, the relevant pay period in 2017 is the week which includes the 5th of April. If your employees are paid monthly, the relevant pay period in 2017 is the month of April.
When you have decided what the relevant pay period is, now you need to work out the gross hourly pay. Verity, how do you do this?
For each employee, you work out their gross hourly pay by using a 6-step process. Step 1. You identify all the pay and bonus pay paid to the employee during the relevant pay period. Step 2. You should exclude any pay, as opposed to bonus pay, that would normally be paid in a different pay period. This might be an underpayment from another month. Step 3. Any bonus pay for a different pay period, for example an annual bonus paid in April, is prorated for the relevant pay period. Step 4. Add together the ordinary pay and the bonus pay as adjusted where necessary. Step 5. Divide by the number of days in the relevant pay period to obtain the daily pay. For these purposes, a month is treated always as being 30.44 days. Then multiply the total by 7 to give the weekly pay. Step 6. Finally, you divide the weekly pay figure by the number of working hours the employee works in a week. This gives the gross hourly rate of pay. However, it is not always easy to work out what an employee's normal working hours are. James, how do you work this out?
Normal working hours are usually set out in an employee's contract of employment. Remember, normal working hours should not include any overtime. Where there are no normal working hours, or the number of normal working hours vary from week to week, the weekly working hours are calculated by taking the average number of weekly working hours over a 12-week reference period, ending with the last complete week of the relevant pay period. In 2017, for employees who are paid monthly, that would be the 12 weeks up to the 28th of April 2017. Verity, taking Dayton's again, can you give us an example of how gross hourly pay is calculated?
Let's take David, an account manager at Dayton's. David's basic pay is £52,000 per annum. In April 2017, he receives £4,333.33 basic pay. He does not receive a bonus. Under his contract of employment, he works 40 hours per week. He also worked 10 hours overtime in April. David's overtime is not included in the calculations, so his gross hourly wage is calculated as follows. Step 1. David earns £4,333.33 basic pay in the month which includes 5th of April. He earns no bonus in that period. Step 2. He does not receive any pay which would normally be paid in a different pay period. Step 3. He didn't receive any bonus in April's payroll. Step 4. David's ordinary pay and the bonus pay for the month of April is therefore £4,333.33. Step 5. You divide £4,333.33 by 30.44 days to obtain David's daily rate of pay. You then multiply this figure by 7 to obtain his weekly rate of pay. This gives David's weekly earnings as £996.52. Step 6. Finally, you divide David's weekly pay of £996.52 by 40, the number of hours David works in a week. This gives David's gross hourly pay as £24.91.
Dayton's also employ Michelle, a programmer, who is engaged under an umbrella contract. She doesn't have normal working hours, but is also paid monthly. Over a 12-week period, ending with the last complete week before the end of April, she has worked an average of 32 hours per week and was paid on average £5,000 per month. She also received a bonus of £9,000 in April's payroll. Using the 6-step process, Michelle's gross hourly wage is therefore: Step 1. Michelle earns £5,000 pay and an annual bonus of £9,000 in the month which includes the 5th of April. Step 2. She does not receive any pay which would normally be paid in a different pay period. Step 3. Her annual bonus of £9,000 is prorated for April by dividing it by the number of days in the bonus period. As this is Michelle's annual bonus, the bonus period is a year. The legislation considers a year to have 365.25 days. This gives a rate of £26.64 bonus per day. You multiply this figure by the number of days in a month, 30.44. This gives a pro rata monthly figure of £750.04. Step 4. Michelle's ordinary pay and prorated bonus pay for April 2017 is therefore £5,750.04. Step 5. Divide £5,750.04 by 30.44 days of the month to obtain Michelle's daily rate, which is £188.90. Then multiply this figure by 7 to obtain her weekly rate. This makes Michelle's gross weekly earnings £1,322.30. Step 6. You then divide £1,322.30 by 32, the average number of hours Michelle works in a week. This makes Michelle's gross hourly pay £41.32. Dayton's must work out the gross hourly wage for all its relevant employees on the 5th of April 2017.
Now that Dayton's has the gross hourly pay for each of its employees, it is ready to calculate the gap in pay between its male and female employees. We will be looking at how this is done and how to calculate the gap in bonus in the next podcast, which will be published on this website.
Unfortunately, we cannot cover every eventuality in this podcast. If you have a problem preparing your gender pay gap figures, and if you cannot find the answer in this podcast, please contact one of the team here at Doyle Clayton, who will be pleased to help you.